Hi, welcome to the Geoeconomics YouTube channel. I'm Rob Kep, and in this installment we'll be talking about how COVID-19 is shaping global economic growth. If the likes of the International Monetary Fund and Morgan Stanley are to be believed, then we can expect a V-shaped recovery, which means in this case a plummet like we've unfortunately been experiencing, followed by a quick upward recovery by 2021. The good news is that recent history supports the idea of a V-shaped recovery. We not only saw that in the last time we had a major recession, 2007 to 2009, but in fact since the 1960s, most of the downturns followed by upturns have been more V-shaped than U-shaped. In the case of what we're experiencing right now, these assessments that predict a V-shaped recovery are actually looking at the return to economic growth occurring by next year. Part of the rationale for a V-shaped fast recovery is that the last time we had a recession, the global financial crisis, in fact this was an endogenous shock, something that occurred within the system, in this case the financial system. What we have with COVID-19 is actually an exogenous shock, something that came from the outside, and a system that is fundamentally sound in responding to the process of simply working its way through the effects of the pandemic. U.S. stock markets also support this view. They, in fact, have pretty much recovered since their depths of the COVID epidemic when it hit the United States. In fact, the NASDAQ, which is tech-dominated, and by the way, technology is part of the solution, of course, to COVID, it's actually had a recovery so strong that it is above where it began at the start of 2020. Unfortunately, if you're among the millions around the world and in the U.S. who have faced unemployment during this time, this cannot be considered good news, and the economic growth pattern that you're experiencing is in the opposite direction, where we've simply seen a peak in unemployment. Sectors related to bricks and mortar retail, restaurants, travel, leisure, they've all been severely affected and will likely continue to be so well into 2021. Although the V-shaped recovery is supported by some very strong voices in economic analysis, it is a minority viewpoint. 9 out of 10 asset managers recently surveyed anticipate a U-shape. We can see here a graph produced by B of A Securities that shows the disconnect between stock market performance and the sinking levels of employment, which you could say offers a better indicator of economic recovery. How many people are now not employed versus how well stocks are doing. In terms of a geoeconomics assessment, there are 3 risk factors in particular to bear in mind, regardless of whether you're anticipating a V-shaped or U-shaped recovery. The first is that we have no idea what the second wave of infections will actually be like. This is something that is simply a wait-and-see game. The second risk factor, and this gets really to the heart of the whole notion of geoeconomics, is the US-China trade war, which is now going off into all sorts of other directions. We have another video posted on the site about what's happening in Hong Kong, and I encourage you to see that if you'd like to have more understanding about the sorts of tensions that are at work here. The third area I'd say pay particular attention to is emerging market debt. Emerging markets, because they lack the sort of advanced medical infrastructure enjoyed by advanced economies, are especially exposed at this time economically. Ironically, too, considering the origins of COVID, China is especially exposed. So we see a China factor at play, not only with the origins of COVID, but also, in fact, with the after effects and what that will mean for the global economy. I'll leave you with some final points that support the bull case. The first is historical precedents. The second reason for hope is that we've already seen very successful cases out of Asia, excluding China for a minute because there's some debate about how successful it's actually been in managing COVID. Look at, for example, South Korea, Taiwan, Singapore, Hong Kong. All of these countries have handled COVID extremely well and minimized the economic fallout. There are also examples of westernized economies that have gotten through things fairly well. Australia and New Zealand, for example, Germany, the Nordic countries. If you like, also Sweden, although Sweden's case is somewhat exceptional because they've adopted a herd immunity approach where they suffered more deaths but had minimal economic disruption. In any case, there are also cases in the West that have clearly showed there is a way to get through COVID and recover fairly quickly. The other reason to be very confident of the prospects for economic recovery involve what's known as liquidity. All this money that's been released, both from the monetary side, central banks lowering interest rates, to the fiscal side, governments spending a lot of money to prop up the economy. This is unlike what we've seen in previous recessions where governments have played catch up or been trying to figure out what to do. Action here was very swift. unlike what many of the medical responses were, economic responses were pretty on the ball in this case. The final reason for feeling bullish about the prospects for a quick recovery from COVID-19 is the process of creative destruction. This refers to what happens when technology comes in and creates, out of the ashes of some economic wipeout, new industries. We've seen this in the case of, for example, remote working solutions, IT, to the whole goal of eventually overcoming COVID, which is producing vaccines and therapeutics to make this no longer a human health threat. Thanks for watching. Regardless of what COVID-19 means for you and yours from a geoeconomic standpoint, I hope from a health standpoint you are staying well. If you'd like to leave your comments, they are very welcome. Also, feel free to subscribe and sign up for notifications. Look forward to seeing you again soon.